Good morning. It's the 4th of January. I'm Nadine Terman. The NASDAQ 100 fell to new low at the end of 2022 in December. And as you can see from this first chart, thanks to ASR, it's moved similarly to the early 2000s bubble bursting. So folks who are moaning about, LTM tech pain should remember that many of us experienced continued greater pain just a couple decades ago. It makes me sound old talking about decades instead of months or years. But back then, the Fed had to ease by 475 basis points. So put that in perspective, before it rebounded back in the early days. And so while we don't expect that all charts are going to be written the same or the Fed's going to have to ease by that much this time around, it just serves as a reminder of recency bias. Back then, higher treasury yields kept equities at bay, especially for long duration sectors like comm services, discretionary, and tech. And I'm bringing it up today because of Apple's recent pain trade. Semis got hit the hardest, the earliest last year. Then hardware caught up in the fourth quarter. ASR rightfully pointed out that pessimism on tech hardware relative to the S&P is fairly stretched right now. The last time it was so bad was about 4 years ago, which was the beginning of a major outperformance period, but one that had falling real yields to back it up, as well as a COVID stimulus package. Obviously, we don't have that going on right now. But interestingly, there's been a dislocation between the VIX index, which I'm going to get to next here, so the S&P vol index and Apple's implied vol at year end. Because Apple is a big weight in the S&P tech hardware index, as well as roughly 6% weight in the S&P itself, you're going to have to see Apple's volatility moderate a little bit before the overall market index can really move up and hold. I know we're seeing a little bit bounce today based on some macro data, but keep this in mind for tech and Apple and hardware. So what could affect Apple's vol? If we could break it into three parts, so macro, fundamental, and technical, we can get into what the answer is. From a macro perspective, we're cautious about rates right now. We've just seen strong JOLTS numbers, and the Fed's been pretty clear about needing labor to soften. Also, growth is slowing globally. If China stimulates greatly, we could see it pull up global growth, but that's not in the cards right now. So right now, put a check in that negative box for macro. And from a fundamental perspective, a reason for Apple's recent weakness is related to demand slowdown. And while Apple obviously is a very high-quality company, great management team, most likely it's headed into a slower growth period on a relative basis. So that also gives you kind of a not-so-great check in that fundamentals. And then from a technical perspective, let's move over to Longbow. I'm going to switch gears here and show you Longbow. Apple's, if we get here, it's in the middle of its range. You can see the white bar in the middle of the green and the red. And it has an odds, this morning it was 2-1. Now it's 1.4-1 because of the move up in the market and Apple itself. So while it's still more upside than downside, it's within its range. It has a neutral trade signal, which we find right here, with a bearish short-term and intermediate-term momentum signal. And while it has an I-vol premium of 31%, until we see improvement in those momentum factors, call it moving bearish to neutral in the short term, we're cautious adding this position, believe risk management's in order. So putting the three areas together, macro, fundamental, and technical, if you're already an owner, watch those technicals for signs on how to protect your position short term until the data improves. If you're watching from the sidelines, we look elsewhere for strong non-consensus positions versus this well-loved stock right now. We want to be waiting until this is in a more bullish formation. Obviously the low end of its trading range. We do like the implied volatility and premium, but we have to see some of those technicals look a little bit better, especially if the fundamentals and macro aren't working in your favor. That's it for today. Talk to you tomorrow.